Hey everyone, welcome back to Corporate Decoder. Today, Transglobal Management Group Inc. just filed an 8, and it looks like a key deal has fallen apart. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing reveals the company's inability to close a significant acquisition, and we need to understand what this means for them moving forward. So what we have here is a current report filed by Transglobal Management Group Inc. It is basically an announcement about something important happening at the company. In this case, it is about a deal that was supposed to happen but now won't. This just tells us it is a filing required by the Securities and Exchange Commission, or SEC, which is the government agency that oversees the stock market. The important date here is the 31st of July 2026. This is when the event we're talking about officially happened. This is the company we're looking at, Transglobal Management Group Inc. You might see it abbreviated as TMGI on some stock tickers. They are incorporated in Florida. This is just background information about the company's legal setup. This is the core of the filing. It is a notice that a really important contract or agreement has ended. This isn't just any small deal, it is something they call material, meaning it is significant to the company's business. So, the company had a plan to buy a golf course business called Apache Creek Golf Course. They had signed agreements for this back in April. This sounds like a pretty big move for them, especially if it was substantially all of the assets of the business. After they agreed to buy it, they realized they needed more money or financing to actually pay for it. This is a common situation where a company might need loans or to raise capital to complete a purchase. They tried to work things out with the seller Dalston LLP. They talked about changing how they would pay, maybe spreading it out or adjusting the amounts. But unfortunately, they couldn't agree on new terms. This is a crucial point where negotiations broke down. The main reason the deal failed is that Transglobal Management Group Inc. couldn't get the money they needed. Because of this, the seller has told them the deal is off. This means the golf course business will not become part of Transglobal Management Group. Here is a financial consequence. The company had already paid a deposit of $200,000 because the deal is off. The seller gets to keep that money. The company now has to record this $200,000 as a loss. For a company that is currently showing a market cap of $0 and a stock price of practically nothing, losing $200,000 is a very significant hit. This kind of loss can have a real impact on their finances. This is the part where the company officially signs off on the filing. This is standard legal language to show that the filing is official and authorized. And here we see the signature of Jeff Foster, who is the president of Transglobal Management Group Inc. He is the one signing off on this news. Now, looking at this filing, we see a company that was trying to expand, in this case by acquiring a golf course. However, they ran into a common problem. They couldn't secure the necessary funding to complete the purchase. This resulted in the termination of the deal and a loss of $200,000 for a company like Transglobal Management Group, which based on recent news, has been involved in other potential deals like acquiring Continuum Software Technologies. This kind of setback can be a major hurdle. It raises questions about their financial stability and their ability to execute on future growth strategies. When a company can't even close a deal due to lack of financing, it suggests deeper financial issues that investors should pay close attention to. The fact that they lost a $200,000 deposit is not trivial, especially when their market capitalization is currently zero. This shows a struggle for basic financial footing. The risk here is that this failed acquisition might signal a broader inability to secure capital, which could impact any future plans or even their current operations. It also suggests a potential miscalculation in their financial planning and deal structuring. The question now is whether this is an isolated incident or a symptom of a more significant underlying problem with the company's financial health. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, hit like and subscribe for more. Check out the Discord link in the description.